Hey everybody, welcome back to the channel, and today we're talking about hypothetically investing $250,000 into the JEPQ. I actually have JEPI up. Let me get JEPQ up, or the JP Morgan NASDAQ Equity Premium Income ETF. You can see, according to FinViz, we have an 11.21% dividend yield, which means $250,000. If we take that dividend yield of 0.1121, we can kind of get a feel for how much passive income we've made, let's say, over the last 12 months on average, which is $28,025 on a $250,000 investment. Now, per month, you're getting $2,335.41 in passive income. So this is definitely something to consider if you're looking at cash flow streams for your portfolio. Now, if you have $50,000, $25,000, it's the same thing, just lower numbers, and you can always build smaller passive income streams that build up to large ones over time. So that's the entire goal, is you take an asset, a digital asset such as a dividend stock or an ETF that's perhaps high yielding, such as JEPQ, and you invest it for passive income. And by doing that, you can generate some very nice passive income with perhaps not as much as you might think. So it all comes down to your risk tolerance, your investing goals, and what you're trying to accomplish. Another way we can look at this, though, is if we were going to invest $250,000 and we take the current share price of $48.24, you can kind of look at the chart as well and see where it's been trading. Been in a nice uptrend here from $41. Definitely getting some capital appreciation over the last several months. I mean, if you've been invested in this thing since December of 2023, we have seen a decent share price run. Now, you could be headed back here to 40, 45 perhaps in the future, just something to consider. But if we're buying it, let's say at $48 even, $250,000 invested at $48, we'll say, and that gives us how many shares we can buy. We'll just say 5,210 shares to make it easy. And we're going to take the most recent dividends and take a look at how much we've been actually getting from this ETF. The most recent dividend is 0.45056. So we're going to multiply that by 0.45056. And as you'll see here, we have $2,347.41 or 42 cents from that dividend, which comes up to $28,000. Okay, once again, take $250,000 if we're investing the entire thing into this as a lump sum. Comes up to approximately 11.26 or 7% dividend yield. Not bad at all. We can also take the same number, so $250,000, once again, divided by the current share price, I believe, which was $48, but we'll just say. So just to show you the math one more time here, 5,210 shares, rounding up, and then we take, let's see here. So we have the most recent high dividend, like let's say a 68-cent dividend in November of 2022. We'll just say 68 cents. And you can see you're getting $3,500 from that one dividend. Now, not every month, obviously, is going to be like that. But, I mean, you still have the potential to make some very high dividend yields with ETFs like this. So, once again, I mean, it all comes down to your risk tolerance and investing goals. Some investors prefer to use the utility of their investments now instead of trying to grow them as much in, say, an equity or something where you're trying to double your investment over an extended period of time, or let's say quadruple it, or even 10x your investment, right? Whatever you're trying to invest in, versus you're trying to get a constant stream of cash flows. This is a tried and true method of consistent monthly income. So it all comes down to what you're looking for. Personally, if you're going to ask me, if I have $1 million laying around, which one am I going to prefer? This is definitely preferable to me anyway, just because I want to enjoy the utility. We're not promised tomorrow. And so it's something to consider when you're looking at this from, hey, I have $500,000, $250,000 to invest. Do I want to get a lower dividend yield and try to grow that for capital appreciation? Nothing necessarily wrong with that. But perhaps I also want to take a portion and enjoy some passive income. Actually have a cash flow stream, which I can always reinvest for more cash flow. I could take perhaps part of it, reinvest it, and the other part, take it out and spend it. So you could always kind of do it both ways, have your cake and eat it too, so to speak. So it's up to you, but this is just an example of the types of passive income you can get perhaps on a $250,000 investment. It's fun to do these types of scenarios. I've always enjoyed kind of calculating these things. Let me know what you guys think in the comments down below. Thanks so much for tuning in. God bless, and we'll see you in the next video. Take care.